Speaking with you today, Mario, and looking forward today to hearing your views on supply chain risk management. Before we start, can you provide us with a brief background of yourself?
Absolutely, and thanks for the opportunity to talk to you, Dustin. My name is Mario Buckley. I am Halliburton's Eastern Hemisphere supply chain attorney. I cover a span of 90-plus countries, anywhere between London and Japan. And my job basically consists of negotiating, reviewing, and giving the company business and legal advice regarding supply chain contracts in its various levels. I've been in this role for a little over 6 months now, but my overall legal experience is a little over 12 years now. With regards to the topic, Dustin, supply chain risk management, the way I look at this, there are three major buckets, if you will, as to how I look at this. The first bucket is what I call the compliance risk management. And this applies when we're going to work with suppliers that, for example, that might represent a company before a governmental entity. We take particular measures to vet them and perform due diligence to make sure that these vendors will not do anything wrong in terms of bribes or kickbacks with regards to government employees because of FCPA and UK Bribery Act potential violations. So if we know that a particular vendor or subcontractor will be dealing with a government entity on our behalf, we take additional due diligence measures to make sure that these companies that we're hiring are legitimate, that the principals are not related to a government employee, either by marriage or blood. So there's a number of issues on due diligence that we perform in order to make sure that everything is done above board. And the second bucket that I look at is the legal risk management, and that we're looking at basically the contractual risk, the indemnities, liabilities, the warranties and obligations. So, and that's where a big chunk of my job falls into is looking at the contracts and looking at the jobs or the scope of work of each vendor or subcontractor, and trying to align that with the operations. And for example, if I'm going to sign up a subcontractor to do gardening services at our facility, for example, the risk structure there is much lower than a subcontractor that's going to be performing work at a well site. They will be working with our people, and there's the hazard of the oil and gas industry. So those are two completely different extremes, but it gives you an idea of how to approach a contract vis-a-vis the risk of that particular job. So I try to look at the risk management from the contractual side, as what the paper says versus what is actually being done on the ground. So if we have a contract for gardening, for example, I'm not going to be really worried about what are the indemnities and liabilities in the contract, because risk is minimum from a operational perspective. Now, if I'm looking at somebody that's going to be working with us on the field, then obviously the concern is a lot more greater in terms of indemnities and liabilities, because the risk of exposure is much greater, right? And then the third bucket is the insurance aspect of it. When we hire vendors or subcontractors, you have indemnities and liabilities, and these companies, and even Halliburton, for example, we have insurance to provide the financial guarantee for those indemnities and liabilities. And in my experience in this role that I'm in now, a lot of times the vendors will have a hard time understanding why they need to buy insurance, explaining to them that the insurance is for everyone's benefit, because it provides the financial backup for the indemnities agreed under the contract. And many times these vendors will say, okay, well, we will agree to acquire or purchase the insurance that's mandated by law in our country, and that's very common in Russia, in the CIS countries. But many times, the mandatory insurance required by law is not necessarily aligned with the risks of a contract. So you still might end up with a gap with regards to the insurance that's provided by law, which the vendors are happy to provide, versus the risk of the contract that might require additional insurance. And that creates a gap that not all vendors that we deal with are able to cover that gap financially. So it's a bit of a tricky conversation, and try to educate the vendors of why it is advisable for them to purchase insurance versus not. It's a hard discussion to have. Many times they're just not, either they don't want to understand, or they don't care, and it's an uphill battle all the time. So that's how I try to look at the risk management on these different levels. On a day-to-day basis, I deal with one or all three of them at a time. It is a challenging environment, depending on which country and the level of sophistication that you're dealing with a particular country or a particular vendor. So it is an interesting experience, because you're always on your toes. Obviously, your more sophisticated vendors will understand where you're coming from, so that the discussion is a lot more straightforward and it's a lot more objective. Whereas if you're dealing with a small vendor in a not as sophisticated country, you have to go through the whole educating process, and that's where the challenges come up, because a lot of times they just don't really get what is the practice in the business world versus what they're used to in their particular geography. So that there's a lot of discussions and a lot of educating, and it's not necessarily a simple process, but nonetheless it's fun. You have your days, there are good days and bad days, but that's just part of the game. But this is excuse me. That's how I try to structure the contract reviews in these three big buckets that I just explained.
And can you talk about how do you overcome some of these challenges? How is it done effectively, the supply chain risk management?
Yeah, well, at the end of the day, as an attorney, we're in an advisory capacity, right? So all that I can do is try to get the parties to reach middle ground that, in my case, is as closely aligned as possible with the policies of my company. So I try to bring everybody together, and whenever there is a gap or we cannot reach an agreement, at the end of the day, it's my function is to advise management of the risks. Like this is the where we're at right now. I'll give you an example. A lot of times, a vendor will request an overall liability cap limited to the amount of the contract, which might sound fair, but the liability cap does not necessarily reflect the consequences of a faulty job. So you might have a contract for $100,000, for example, but this particular vendor, if he does not do his job well, can cause a $10 million exposure, right? So you have 100,000 versus $10 million. So that causes a big gap. And it's my job to bring that as close as possible where there's a match. And when that doesn't happen, I advise management saying, look, this is the risk. This is what we can get out of the vendor. We cannot get them to agree to a higher liability cap, for example, an indemnity. And you need to decide whether you're willing to take that risk or not. All I can do is advise and explain the risk versus the reward and what are the consequences. And my business folks need to make that decision, because at the end of the day, the decision to move forward or not is no longer a legal decision, but it's a commercial point for the business to decide. So my job is to get them as close as possible to the point where they can make a decision whether to do something or not. Hello? Yes. I think the only recommendation I can think of right now is to anybody that is reviewing a contract and trying to bridge gaps is try to keep in mind what is the actual work being done versus what the contract says, because as bad as a contract might look in terms of how it's worded or what are the indemnities, it might stink on paper. But if you look at the actual performance, at the actual job, the risk might not be as bad as what the contract reflects. So you always try to keep that in mind, that even though a contract might look terrible on paper, the actual execution and performance is not as risky as what the contract says. So that's the biggest recommendation I have. Try to keep an eye on both. And the more you understand about the business, about what's being done, the more comfortable a lawyer is confident to give the advice as to accept the risk or not, based on his or her knowledge of the actual operation. Having as much knowledge, asking as many questions as possible to the folks that are going to be managing this particular subcontractor or vendor will help you understand the risk and kind of translate that into the contract, either by negotiating the contract or by simply saying, the risk of the execution is very low. I know the contract doesn't look very good, but reality is that the execution is low, and therefore the exposure is limited as well. So just try to keep an eye on both and try to learn as much as possible from the particular service, so that you can advise your customer in a more effective way.
And thanks for sharing today, Mario.
Well, thank you very much, Dustin, for the opportunity, and look forward to talking to you again soon.